Today we're going to talk about buy downs, and I'm going to show you guys how to even calculate them yourself. So you'll want to make sure that you have your phone calculator handy, because there's a couple different ways to do that. Waiting on someone to tell you how to calculate is sometimes frustrating. So I want you guys to know how to do it yourself. BJ, I am having a hard time. Let me just go to OneDrive. Hang on. Okay. Don't want to do that yet. Okay, I'm set up, so we will get started. 2 minutes late, apologize for that, but now we're all set up and ready to go. So those of you guys in the room, are you here to learn about buy downs? Are you here to get the CE hours?
Can we say both?
And are you here because you're trying to get the free quarter of MLS dues? Okay, cool. That all sounds good. Do what?
I forgot about that part.
Yeah, yeah. So we are keeping up with who is here and who is not for the quarter of free MLS dues based on the sign in. So BJ, will you send to us also the course evaluation forms to Sherry, and Sherry will print them for us. So make sure you're registered on EventBrite, even if you're in person. Is everybody registered on EventBrite? If you were doing it for CE, you indicated on that. So that's how we're keeping up with who's here for CE. Huh? Because you paid for it. And then it's a lot easier for us to keep up with. We started that 2 years ago, and it made it a lot easier. And then we're also keeping up for the EventBrite's keeping up with everything for us. You will get a recap email on Friday, and on Friday in that email will be a recorded version of this class. So it's everything that everybody on Zoom is seeing. You will also receive any handouts or the handouts, because this will have handouts to it, and the slides. So I'm not making copies of slides anymore so that you guys are more open-minded, looking and thinking, and like you have to listen to what's being said instead of advancing yourself and reading through the content before I even get there. So it should help you retain the information. I wanted to include buy downs as part of our conversation because I think we heard from an appraiser last week. It is an option to help us really help the buyer in getting the house so they can afford the house right now. And it'll help the seller because they have an option that maybe some other seller doesn't have or didn't know existed. But the question yet last week that came up when I was talking to a group of realtors about the buy down is, when you have a price reduction.
I'm so sorry, I'm a mouthful. Y'all have a good day.
Hey, Kristen, mute yourself. When you do a price reduction, then obviously that, the price range has adjusted. So a lot of times you're adjusting the price because you want a different, you want a different price range for searchability. And if you do the buy down instead, you're going to benefit the buyer, but the buyer's not looking at that information. They're looking at the sales price. So what do you do about it? And one of the suggestions were, if you were to do a price reduction, you could have a printout that is part of the the attachments and the photos that the consumer see, a printout that is uploaded like a picture that says seller is willing to do a temporary buy down in lieu of price reduction at buyer's request or something like that. I am not a broker. I'm not licensed to be telling you guys exactly how to say that, but it is a conversation that you guys could have in your offices. How do you get the benefit of the price reduction, but also let a buyer know we understand that lowering the price doesn't help the monthly payments like a temporary buy down or a permanent buy down. And for those reasons, we're willing to do one or the other.
Go ahead and like in the property description.
Mhm.
we choose to do that. That's like my first thought. Is what?
It-
Is property dot com.
Yeah, so Gina's saying she's putting that in the narrative, in the comment section of the listing itself as the first sentence, so people see that immediately.
With permission of the seller.
With permission of the seller. You got to get the permission of the seller to do that. So any of those questions that you guys have, we have brokers in the room that can give your opinion from a broker's point of view on what you could or could not say. I'm just presenting from a lender's point of view and how you talk through this. But we'll first start with explaining what it all is. So I'm going to share screen for those of you guys on Zoom. I think I'm going to do it this way. Are you guys seeing the slides? BJ, can you see the slide?
Yeah, we can see them.
Okay, perfect.
Yeah.
All right. So Buydown Power. Just to give you guys an idea what we're seeing right now in interest rates, just this week alone. Perfect credit score, perfect conventional loan, 20% down with 7 1/8. And I was just talking to a leader in the mortgage industry, and she has attended several conferences and following this service. It's like Keeping Current Matters. It's a different name though, and they're following the trends every single day. And she just left another convention, and some are predicting that we'll see 8s. Most of the customers we're talking to right now, we're talking to a lot of people, but they're not ready to make a commitment because they want to wait and see what happens. And my question is, if as many people that are waiting to see what's going to happen, we're going to have a supply and demand situation again.
Do they really think it's gonna go down tomorrow?
They don't know. Remember, people make decisions based on their past history or stories. So either a story they've experienced or story someone's told them is how they're making decisions, which is why I think it's really important that we all stay up to date with what's going on. I share in the Realtor group a market update every so often. I get them daily. So if you want to see them daily, I'll email them to you. But so if you want to stay on top of how the market is responding, what reports are coming out, what possibly could be affecting rates, I can send that to you. I just don't want to create more fear than necessary. There's that fine line between creating fear and providing information. And you guys have to decide what that means to you when you're communicating with people as well. So, but the buy down conversation is one I just want you guys to be familiar with. Now, we had an appraiser here last week, and Chris did say, I mean, whenever you're looking at values, there is a difference in how he would view the sales price based on whether if the buyer and seller agreed to a buy down versus the price reduction, it's going to keep the values in the neighborhood from going down too quickly with a bunch of price reductions. Each appraiser is going to have their own opinion on that. So, does anybody have, I mean, are you guys tracking? Is there anything y'all want to add to or talk about in regards to the market? No? Okay. So how much, I mean, the trends you guys can see, I mean, but right now we're like this on rates. Every so often we'll plateau and we'll make a little bit of adjustment, and then it's back to a rising pattern. When you're showing someone, if you're going to show someone a house this afternoon, make sure they've talked to their lender in the last 24 hours, because you might be wasting your time. especially if they hadn't talked to a lender in 2 to 3 months, because it's different now. And we're seeing some of the lending guidelines tighten up. So someone pre-approved last month may not still be pre-approved, and it needs to be updated. So don't go off of old data. It's just changing too quickly. Just to give you an idea of payment shock wise, I'm going to move you guys down here. Someone looking at a $500,000 house, putting down 20%, in January, their payment would have been $2,200. Then in April, it went up to $2,600. Mute yourself. See if I can mute that person. No, I wasn't the first to log in. Whoever was first to log in to the Zoom needs to mute people. And then in June, with rates at 6%, was $711 difference between January and June, and rates are up even more now. That's why you can't be showing off of old pre-approval letters. It's too different. The market is just not the same. What I didn't put together, and what I could put together, is if someone was looking for P&I around $2,200 a month, what price point do they need to be in now? That might be a little more helpful. So you have an idea how much from January to now, the price points that people are shopping in has changed based on the payment. So again, you guys are showing in the right price ranges. So here, excuse me, I'm gonna have to get some water in a few minutes. Just put in, the one thing that is just, that we have going for us is this is a lull for us. That's all it is. Because we have people moving here. And it's not a want for them to have a house. They're moving here and need a house. So it changes things. People that have the choice to buy or sell, they're likely going to choose not right now. But if they need, we have to be very mindful of, why did they call you in the first place? What was the need? Or was it just a want? And if it's a need, when their emotions go high, you might have to go back to remind them why they're looking for homes anyway. We don't have enough rentals for all the people moving here. They're going to need to buy a house. There's,
Okay.
Thank you.
Okay,
Cindy.
all right. See you, Carlos.
Hey, BJ, can you mute? I don't know if you can mute people or not. I'm sorry I didn't get on there first so I could mute. From a neuroscience standpoint, on a scale of 1 to 5, when someone gets to a 3, 1 being my life is amazing and nothing can change that. It's just a great life. Everything's easy. To a 5 being I'm overwhelmed, burnt out. I can't even, I just don't think I can keep going on. If your people are at a 3, 4, or 5, they cannot make a rational decision. It's not possible because they are working with the fight or flight part of their brain, which is why we have to ground them back to the need. Why did you call me in the first place? Because you guys needed to move to a different neighborhood for safety reasons or whatever it is. You're going to have to switch them, their thinking back. And a lot of ways to do that is to go to happy places in their minds. Help them go to a happy place in their mind, in that home. If safety and security was an issue, this home provides that for you. Can't you see your kids just playing freely in the backyard while you're cooking dinner? Whatever it is, to change that story in their mind, to get them to, because they can't function at 3, 4, and 5. They cannot make the decisions that need to be made. So I think that it's really important for us as leaders in the industry to be educated, and we have to keep our emotions in check. Because we can't creatively find solutions when there's a problem if we're at a 3, 4, or 5. How many of you guys have had a problem on a file or on a transaction, and there's just some crazy stuff and the buyer and the seller won't come to agreement, and things need to be done to the house and the seller's saying, hell no, and the buyer's going, I'm not buying it until this is done. And you can't come to it. I mean, you're like, you're trying to keep the deal together. And you finally give up and you go home and you just sleep on it. And then you wake up the next morning and you go, holy cow, why did not think of that yesterday? We could do X, Y, and Z. It's because you were no longer stressed. You just got some sleep. You just took it off your mind for a little bit. Then you can problem solve. So we're going to have to do a lot of that. So I love the buy down option because it does allow us to change the script and has them thinking differently. I have this slide in here just so you guys know, I mean, we are in a good spot. There are a lot of parts in the country where sales, I mean, they're going to feel it a lot more than what we'll feel it because we've got so much growth here.
I just read this morning that in Salt Lake, their rent has gone up 48% in 2 years.
48% in Salt Lake.
2 years.
Rent's gone up 48% in Salt Lake in the past 2 years.
2 years and no increase in income.
There are investor conglomerates that have pulled billions of dollars and are buying real estate. And they're not buying it to flip. They're buying it to hold and rent. And that's what we're fighting to on the rising rents, which creates a need for buying. So what is a buy down? And there's a couple of different ways that you can do a buy down. A buy down is an arrangement that gives the buyer or borrower a lower rate for a certain period of time if it's a temporary buy down. You can do a 2-1 buy down, or you can do a 3-1 buy down. The 1 means that the rate is only decreasing or increasing by 1%. The 2 determines for how many years. Okay. So if you're doing a 3-1 buy down, then the rates are 7 and an 8. Then the first year, the rate would be 5 and an 8. The second year, 6 and an 8. And then the 7 and an 8. Well, I told you wrong. No, it'd start off at 4 and an 8, then 5 and an 8, 6 and 8, and then you'd go to the 7 and 8 for the rest of the period of time. So you have also a permanent buy down. So the theory behind the temporary buy down is that the rate's going to be lower for the first couple of years. By the time they get to the rate going to the full market value, there should be a point in time where we'll be able to refinance them down to the lower rate. And even if for some reason they don't qualify, they've charged too much on the credit cards and now they're having troubles paying that credit card, which is my biggest fear right now. I think we're going to have a credit crisis, not from a housing standpoint, but credit cards. Because with the cost of living rising like it has, people are charging their credit cards like nuts. I mean, like I don't remember statistic wise, but the growth in the credit card balances is huge. And with the increase in the Fed rates, the payments on those credit cards in this next payment cycle is going to be quite a bit more than what they were expecting or had been paying. And so my concern is those growing balances in the rising credit card rates are going to cause some lower credit scores. So the one thing we won't do is promise somebody that they will qualify to refinance whenever the temporary buy down is back to the market value from that point forward. So we want to make sure that they're prepared for that bigger payment. They're hoping for the lower payment with the ability to refinance. But if that doesn't happen, it's still a fixed rate at market value after the temporary buy down is paid out.
Michelle, I have a question.
Yeah.
So if today's rate is 7.5, maybe somebody does a 3-1, so then at the end of the 3 years it goes back to 7.5, and then
Yes.
go to whatever. Let's say it's 13%.
No, if whatever the market rate is, you're just temporarily buying it down, but you're still locked in at that market rate. It will not go up. But that's a really good question. And that's one thing our buyers need to know and understand. Once you go to market rate, that is your rate. The rate's not going up anymore. The only thing that would change your payment would be taxes and insurance.
So it won't go down at all.
It goes down at first for the steer, but no, it's No, regardless of what the market does, you're on a fixed rate note. What you need to understand about the buy downs is the seller is literally paying the interest difference for the monthly payment to be lowered. So they're paying the interest difference between, 4 1/8 and 7 1/8. That money is going into an escrow account to subsidize that payment. So, but it is still a fixed rate mortgage. We will get an alert as soon as the rates drop and it makes sense with closing costs and all for that customer to refinance. And we'll be refinancing those. I had a customer come to me the other day and said he was talking to us and he was talking to another lender, someone I highly respect out of the Dallas market, but I wasn't loving the way he was presenting some of the information, because he was telling her that they would do a no cost refinance. Well, y'all know on a closing disclosure, there's the lender fees and there's everybody else's fees. I can't promise or negotiate someone's fee on their behalf. And I certainly can't predict that they would do that in the future. So there are going to be lenders that will say that they'll do a no cost refinance when the rates drop. They can't promise a no cost refinance. Those aren't their fees to be saying that. But we will be reducing the cost of the refinance to help people out when the rates drop. That money is also, so the money from the seller would be considered a concession. And I'll show you how to calculate it in just a minute. But that concession, that money from the seller on the closing disclosure as a concession is going to go into an escrow account with the lender. If the buyer ends up refinancing 2 years later and did not use up all of that money from the seller, the buyer will get it back as an escrow refund, which will help that refinance, lower the cost of the refinance, basically. So that's still their money. The seller gave them that money at closing. It's still their money. Well, no, we're still, even if they did a 2-1 and they're 1 year into it, rates drop and they refinance, they could still get it. Yeah. Yeah. As long as there's still money there, they'll get it.
3, 2, 1. 3 stands
For the,
2 stands for
this,
2% the first year.
it does, it really should, should really read 3-1 or 2-1. To be logical, it would need to read 3-1 or 2-1. You're either lowering it for 3 years or 2 years, depending on what the seller is willing to pay. A permanent buy down is literally paying a discount point to lower the rate. Right now, there are no par pricing. There is not a rate that's posted with 0 points paid. Not possible right now. We have a meeting today at 1 o'clock to talk to us about why is that. This is historical. This is not normal for us. But why are we seeing that? But if you think about it, any investor buying a mortgage loan right now, so any of your mortgage-backed securities, those investors know that they are going to get refinanced. And when they price loans and they determine the profitability of a loan, they're determining it based on a 6-year payout. Because typically people will move every 6 years. But because chances are we're going to have rates drop and people are going to refinance again, the investors are wanting more of their money up front and they're charging points. So you can't get a par price right now.
So even at 7.8,
you're paying 2 points.
you still have to pay 2
Yeah.
points.
Yep. Now, if the seller was willing to, the buyer is, all right, it's going to cost 2. Everybody quoting rates is quoting at least 2 points in the rates. At least. But if the buyer wanted an even lower rate, the buyer could have that lower rate. It's just going to cost them more money. And if that were the case, the seller could give seller concessions to cover the discount points to lower the rate. Yes, ma'am. You're fine. No, I love the questions. Ask them.
I'm just getting confused because we got in normal push out the points.
1.5, 2 points, 1 point.
So if
7 and
you're
8
working it by now, then your seller's paying 2 points. One for 1 point.
So a point is no, if someone's paying 2 points, the calculation is just 2 points of the loan amount. So if it's $150,000 loan amount and you were paying 2 points, then you would pay $3,000 on top of closing costs. Yeah. And the seller could pay, the seller could cover that cost. So there's your explanation of your 3-2-1 buy down. So if you're doing a 3-2-1, which again, it really should just be a 3-1 buy down. For the first year, the interest would be 3% lower than the market rate. Second year, it's going to be 2%. Third year, it would be 1%. And then after that, it will be market rate from that point forward. Okay. Then on the 2-1 buy down, it's the same thing, except you're only buying it down for the 2 years, 2 points. Okay. And we're doing a really good, like if you were to do a buy down, in this scenario, it's a $600,000 loan. And this is at a 6 1/8% rate because this was done a month ago. The savings, if you were to do the 3, would be $860 a month in savings to the buyer. First year. Second year is $590 savings to the buyer for that year.
500, how much?
590
Total
per month. 590 per month. And then after that, it's 6 1/4. Actually, that's a 2-1. So just know it makes, I mean, if you were to reduce the price $20,000, would it help them monthly like that? Hell no, not anywhere close. Which is why those price reductions are, I mean, it gets people's attention, but it's not solving the problem.
We still have to qualify, so we can go by.
Exactly. Yes. Jeff, you always got the good. You have to qualify. The buyer has to qualify for that higher rate because we got to know when that rate kicks in that they can still make the payments. All right. So I'm going to show you how our slides are a little bit different than the last slide. So I'm doing this different order. The one thing you have to know, if the seller's going to be helping the buyer at any time, it's been a long time since we've had seller concessions. So I'm just going to quiz you guys. This is new for us. Some of us is totally new. We're having to think again. You have a conventional loan. The buyer's only putting 5% down. How much can the seller pay towards closing costs? What percent?
3%?
Yep, 3%. So if a buyer is a conventional loan and they're only putting 5% down, the seller can only pay 3% of the loan amount towards the buyer's closing cost. If the buyer was putting 90% down or 10% down and you're doing a 90% loan to value, so the buyer on a conventional loan is putting 10% down, how much can the seller contribute? 6%.
6%.
This is really important because when you're doing the math, like I'm going to show you how to do the math in just a second. If we were back here doing the math, if your seller is willing to pay more than 3%, but your buyer only has 5% to put down, you can't use all that money. So maybe you're better with a little bit of a price reduction and then use the rest of the money for concessions. Yeah. If you're VA, and of course, in most cases, the veteran's not paying any down payment, and it wouldn't matter anyway. They could put 50% down, and this concession part of the calculation does not change. VA allows up to 4% plus the VA non-allowables, as long as the lender is not charging an origination fee. An origination charge and a fee are two different things. VAs get complicated. I don't care if I'm the lender on the transaction or not. If y'all got a VA transaction and you are trying to calculate how much the seller needs to pay or can pay, just text or call us or email us. Let us do the math for you. VAs can get a little complicated. You got to know what the lender's non-allowable total is, and it's going to be different from lender to lender. Origination fees aren't hardly ever charged, but you got to confirm that that's the case, because that will determine how much the seller can pay. But I really do love VA loans, and they're really pretty easy except for some of the little quirks like that. So don't be scared of the VA loans. FHA. FHA, the seller can pay up to 6%, but not to exceed the actual closing cost and prepaids. The seller cannot contribute to the down payment. It can only go to actual cost. That's going to be really important information for you guys in the coming months. I do. BJ, write down, because there's even on a conventional loan, you can go up to 9% seller concession depending on the down payment. It's 20% or greater. On investment loans, the seller can pay up to 2% on a conventional loan. We do have a chart. BJ, will you make sure we send the chart out on Friday when we do the recap?
Will you go back to the FHA? They could pay up to how much?
6%. All right. Yeah, as long as it's got to go to actual cost. All right. So the permanent buy downs, like I said, there's nothing complicated about that. They are just buying down the rate. They're just paying discount points to lower the rate. And I'll show you guys, I'll log in just a minute and show you how rates are even figured so you can kind of see what's going on. Be interesting. I haven't seen it today either. So, all right. So you guys know the benefit to the buyer is huge on a 3-2-1 or 2-1 buy down, right? If you're doing a permanent buy down, this is how little, like, if you could buy the rate down to 5.25 versus 6.25, it'd probably cost 4 or 5 points to do that. But that would save the customer $300 a month forever, starting from their first payment. So not near the same payment savings, but it's for the life of the loan. So, a lot of loan officers aren't really promoting the 2-1 buy downs or the 3-1 buy downs because their concern is that people aren't going to qualify for a refinance and their payment's going to be higher. Yeah.
Does impact buyers' loan amount or stability to qualify. So if you get
True.
right on the edge, you can buy it down.
You're right.
Slide right in.
You got lending experience, don't you? Well, you're good at this stuff. But you're right. A permanent buy down, if you've got someone that does not qualify, but they love this house, they love it, you could look at doing a permanent buy down and help them qualify for that house. How many of you guys, though, are doing reverse offers where the seller is making an offer to an interested buyer? How'd it go? It didn't work. How long ago was that? I think we might see more of that. But so, if you understand what the buyer's pain point is, if you can get honest answers and you understand what the buyer's pain points are, there may be some ways to find creative solutions through just understanding what options are available. And this a permanent buy down would be one. I'll facilitate. I would want a broker doing that. That's getting outside of what I'm qualified for, really. I mean, I understand it, but y'all would ask questions that I wouldn't feel comfortable answering. All right. So let's go back here so I can show you guys how to physically make the calculations. On screen, you guys can probably see this better than we can because it's so small. Okay. So on that $600,000 example, to figure how much the seller would need to agree to pay, you would take this payment difference of $860 for the first year. So 860 times 12. That's the payment difference between the 6 and an 8 and a 3 and an 8. First year buy down. They're saving $860 just in interest. Okay. The seller is willing to pay that interest as a temporary buy down. So it'd be 860 times 12.
10,000.
Second, how much is it?
10,320.
Perfect. Someone write that number down. All right. The second year, you're going to save $590 a month. Times that 12 or times that by 12.
7,080.
And then for the next year, it is should say 5 and an 8. So that would be 113 times 12. And then add all three of those numbers together. If you didn't have the P&I already figured for you, you could always go to my website and go to the calculators. There's mortgage calculators, and you just pull down the one that says total payment and it'll figure your P&I for you. But you would do it the same way. You would get the P&I for all three of the years, multiply each year by 12, add it all together, and that's what the seller's contributing. And that money from that seller is literally going into an escrow account to subsidize that payment on a monthly basis for the buyer. Does that kind of simplify it in y'all's heads a little bit?
What was the total for all three?
I don't know who did
It
the
was
math.
It was roughly around $18,600.
18,756.
So that's what the seller would have to pay.
Instead of lowering it 20,000.
If you had a $600,000 house, yeah, I mean, a lot of times they were going to lower it, what, 20,000? There's been a lot of scenarios where the buy down was cost less than what the seller was willing to lower the house price to you. So maybe you go ahead and lower it just a little bit to show a little bit of movement and then offer the buy down. I don't know. I mean, you guys, we're going to have to get really creative to get people excited. Post about these opportunities. Huh?
We have to explain this to the other agents. They know how to explain it to their.
True. You know, I do have a pretty good flyer on that too, explaining the buy down. So we'll attach that with a summary. They're very easy to understand. And then if you have a specific house that you want to promote a buy down on, I have another flyer for that will have all of the information broken out. So you have the monthly payment for the buyer, and then you have the total amount that the seller would have to pay. Now, we'll provide those for the listings. I mean, like I'm seeing those put in the MLS now as a picture in there. So, and we do quite a few of those a week. It's, you know, it takes, give us heads up. Don't want it in 5 minutes, but we'll put it together for you so you don't have to do the math. Now the one thing I did want to go ahead and bring up is the appraisal gap. If we see values go down, then the buyer's going to have to come up with the difference between the appraised value and the sales price. But the seller can still do that 3-2-1. They can still do that buy down. But in a lot of cases, the buyer's going to be asking the seller to come down on the price. So that buy down then might go away. Or we change the buy down up and you just do a shorter term buy down, just to tide them over until what they hope is a lower market. Here's the conversation though that I keep hearing and having. We're going to wait. Well, if you find the house that you really want and the seller's willing to buy the rate down to what it was, you know, a couple months ago, why would you wait? And like everybody else, get the house now. I mean, if they're waiting for rates to drop, where are they living right now? And how much is that costing you a month? I was talking to Shelley Zavitz. A lot of you guys have read her book, and she's got this online training program where you guys can go and download training. Like I've recorded some content on different personality types and how do you talk to the different personality types on a buyer side and a seller side. Really good stuff. And it's all little 15-minute courses that you can download. But she also has a training program, and it's an online live training program. And we were talking through some of this the other day. And the struggle right now is getting people to understand, where are you living? What are you paying right now? If you're renting something, waiting to buy, every dollar you spend is going towards somebody else's mortgage. So if you have to, I mean, if you can get into a house as a first-time home buyer, you finally get to negotiate. You finally even get a chance to make an offer. As a veteran, how many of these contracts were just totally ignored? And now they actually get to write a contract that gets negotiated. And you can even ask for the seller to help pay some of the cost. So if you have all of that going for you, why would you let the interest stand in the way of buying? Why would you wait till everybody else is going to be trying to buy that same house? You're going to be back in the same situation where you don't even have a chance again. We just went through that. And that's why first-time home buyers weren't able to buy. And they can right now. But I think, again, we have said it in each one of these series, we have to get better at communicating that on social and in networking opportunities. Wherever you go, people need to know, we don't know what's going to happen in the future either. But home is a necessity. And if you're going to own a home, you really probably ought to be smart about it financially. And every month that you're in that home, people say all the time, how much is that house going to cost you? Sarah, how much is a $500,000 house going to cost you? It's going to cost you whatever that payment is with that month for however long you're in that house, right? And the actual true cost is only the interest and the taxes and the insurance, because every single month you make a payment, you're making a payment to yourself. You're going to get that money back when you go to sell it. So the only cost to a house is the interest, taxes, and insurance.
Don't you take that off the taxes only?
And then you're going to take them, you're going to itemize those. Guess what? Your interest, you're paying enough now in interest, you can itemize. People that have a 2% interest rate, they probably don't have enough expenses to itemize right now. So we're not even talking about the tax benefit. And there is a tax benefit to the higher rates. So people are so hung up over the interest cost, but wherever they're living is costing them something. What is it costing them? And if selling your home, I talked to a sweet little buyer the other day. Selling a home to them means being able to pay off the credit card debt that's looming over that's just hanging over their head. They remodeled their house and charged it on a credit card. And that's scary. I mean, it's a $25,000 balance on a credit card. Well, with these rising rates on credit cards, that's going to get expensive. So what if you had to pay a higher interest rate right now? Getting rid of, you're paying 26 or 27% on a credit card, you sell your house and get rid of that credit card debt and go get yourself, I mean, they were able to, they still hadn't decided to buy, but pay off everything and have no debt. Yes, they have to pay a little bit more for the house. Yes, they have to pay a little bit more in interest, but they were still household wise, cash flow wise, they were still ahead selling and buying, but they're hung up on the damn interest rate. That's not financially smart. But we got to communicate that information to people. People need to know there are options to buy a house to make it make sense right now. So again, the buy down, how you calculate that is so simple. You just get a mortgage calculator out and you get the P&I for the first year interest rate, do the P&I for the second year interest rate, do the P&I for the third year if you're doing a 3-2-1. And then you multiply the difference in the P&I and you times it times 12 for each one of the years, because they're going to make that lower payment for 12 months for each interest option. Add it up. That's all it is. Nothing fancy. The permanent buy down is a little bit more complicated. Let me show you what that looks like. I have to log into our system, so it may take me a second. Don't be looking at my password.
Sorry.
All right, let's just do a 740 credit score, 43% debt to income, Grayson County. It's not a manufactured home, and it is owner occupied. One is just a single family, conventional. We'll do a fixed rate 30-year. We are doing escrows, and let's do 450 sales price. And let's say they're putting 5% down. Oops. And it's a purchase. I don't have a loan program in here, so it's going to show you every loan program that's particular. Cindy hadn't found silence. Okay, so rates are looking a little bit better today. That's great. But this gives you an idea. So based on that scenario, here's all the different loan programs this person would qualify for. But if I'm just looking at a plain Jane conventional loan, the rate today, it's pretty close to a par. Let's see what I'd have to do.
Michelle, can you share your screen?
Yeah, that would be helpful, wouldn't it? I'm sharing secrets over here. So if you were doing a permanent buy down, the 6.99, there's not a par rate, just like we talked about. You could get a 7 1/8, but it's still going to cost you 0.75%. And I know that because I'm looking at this right here. This is the points, right? So if someone was wanting the least amount of money out of pocket, then you would want to do something as close to 0 points. But if the seller was willing to pay to buy down the rate, let's say that the seller was willing to pay a point. Buyer end up paying a point and the seller's going to pay a point. Perfectly fine. That gets their rate to 6.75. The payment difference with that is 27.72 is the P&I at 6 3/4, and the payment at 7 1/8 is 28.80. So it helps the buyer by whatever that difference is, but every single month there's no temporary buy down. It is that rate for the life of their loan.
That's $45,000. On a $450,000 loan, it's $45,000.
2% of the loan amount.
One for the seller, one for the buyer.
Yeah, right. But 1%. So if the loan amount is $427,500, then the point would be 4,200. Yeah, 42.75, 4,275. What if the buyer and the seller were splitting it? If the seller was agreeable to pay both, he's paying $9,000 towards closing costs, we could use all of it and not have to. The buyer wouldn't have to pay any.
Is there a limit to how many points the seller can pay? I know.
Yes, Texas has got Texas has an APR cap, and so I can't tell you what the percentage is or dollar amount because it depends on other factors. It's an APR cap, so the lower the loan amount, the less the seller can pay. Texas has all kind of quirky guidelines, rules. But that kind of gives you an idea. But this is why now all of this is good until the market reacts to any kind of report or announcements that go on today. So when a buyer is getting pre-qualified or pre-approved and a lender is working on figures, It is the figures for that moment, literally right now. So when a buyer tells you, I'm getting a better deal at so-and-so, they don't know that. All they know is what has been estimated. And that's like a survey telling you to the penny how much a survey is going to cost when they hadn't even gone out there to see how much wood and creeks and snakes they got to avoid to do the survey. Right? I mean, they just don't know. And so until someone says, we have a contract, here's the address, and we've already done the pre-approval, can we lock them in? And that is the only time they would know exactly what their interest rate's going to be. Everything else is just a rough estimate, just to give someone peace of mind and comfort and an idea what that house would cost them if they were to proceed with buying it. So, and then once it's locked in, please know and understand, once a lender commits to whoever we committed to, Fannie Mae, Freddie Mac, Penny Mac, whoever is going to back that security and service that loan. I mean, we're going to serve it. We'll have the servicing rights. But once we make that commitment, the market is hedged based on the pipelines of loans locked. And if we don't honor that lock, there is a penalty to us as a lender. So we won't lock a loan until we're sure it's going to go through. But if the rates drop after we lock the loan, say we get one of the little baubles that we get, and we locked them in at 7.125, and it costs the buyer 3/4 of a point for that rate, and the rates go down to 6.75. We can't just unlock that loan and then lower the rate unless they paid the premium that you have to pay to have the float down option while you're shopping.
What does that look like?
The float down option.
The premium rate for that?
So I think it's 1% now, isn't it, Brandy? They just changed that. I'll tell you, I have a sheet for that too. But the lock and shop is not a bad option as long as you have someone that is serious about buying, because we can lock in their rate right now, and then when they find a house, the rate's already locked in, but they have to fund within 120 days. So, and they're paying those fees up front. It's either 1 or 1.5%. I mean, they have enough skin in the game that they're serious and they're not wasting your time or mine. But then the rate is locked in, and that goes as a credit as fees paid up front.
It'd be really good for a relocation because they're going to buy.
Mm-hmm. Yep. So, I mean, you'll know real fast if someone's serious if you put them on a lock and shop and they pay the money up front and they know they have to be moved in and funded within 120 days. I mean, you're meeting them at houses hot and heavy. Because they've got money on the line at that point. But then they don't have to worry about everything that's going on. They're locked in. And then right before they're closing, if the rates have dropped significantly, then they can drop the rate. So it's like an insurance policy. Your rate's not going to be any higher than this. Keeps them from freaking out. Does anybody else have anything that they would like to talk about or share, or challenges that you want to talk through? Marketing ideas on how to use some of this?
How do you promote it to the seller? Because, I mean, you did a beautiful job of talking to buyers during this time. How do you talk to sellers during this time?
You guys know whether the house was priced where it should have been, or if the market has shifted enough that now you need to reconsider the price of the home. So when you're talking to the seller and you've ran your numbers and you know that really the house is priced too high and it might have an issue with the appraisal, that's a little bit different conversation than a buy down conversation. So just make it real clear of not all price reductions are great candidates for buy downs because they just may be priced too high. If the house is priced right, but there's just not movement, maybe it's a funky floor plan, or maybe it's just location, whatever it is, people are not going and looking at the house. The conversation to me would be, we're not seeing the activity that I expected to see. I do know that buyers right now are very spooked over interest rates. How about we promote that this home qualifies for, or that you're willing to buy down the buyer's interest rate to help them get excited about coming to see yours, because not everybody is doing that. So it might be a way to get attention and draw people to the house that wouldn't have otherwise. It's another way to market the property. But just make sure it's the right scenario, because you don't want to, I mean, you know, I teach, in fact, you guys are invited tomorrow at Better Homes and Garden. I've been teaching the 7 habits of highly effective real estate agents, which has been really cool. We're doing the last habit tomorrow, sharpen the saw, which is what you guys are doing here today. But one of the habits is, you know, with the end in mind, and I'm always thinking, how do we make sure that everybody's at the closing table and smiling and happy? Well, making sure that you price the house right, or that the seller is willing to be flexible after they realize that you were right. And then, you know, like all of the conversations that you got to have as a seller, knowing that you're just trying to get to the closing table with the buyer and a seller and everybody smiling. And so I understand some sellers, just like buyers are stuck on old interest rates, sellers are stuck on old sales prices. Like they think that they can get what they could get on their house just 3 months ago, and it's not the same. And so, you know, the buy down conversation needs to be the right scenario for it to be successful. I mean, you don't want to just use it for a marketing gimmick, but in the right scenario, it is a good option. Yes, Angie.
So if we wanted to market that the seller would be willing to do the buy down, how do we get in touch with you guys? Just email them?
Yeah, that's a good question. So Angie asked if they do have, if you do have a seller, it makes sense to do the buy down and market it that way. And you want the flyer for the buy down, email castleteam@guildmortgage.net. Or your lender of choice. They should be able to do this too. I don't know. I'm not seeing a lot of other lenders provide the marketing material. But I'm also not going around and asking. Yeah, you may have to take the guild off of it. Yeah.
I think that was my issue.
Yeah. Just crop it. Yeah. From a legal standpoint, I disclosed it the way I have to disclose it. And if you choose to disclose it differently, then it's on you, not me. I have proof I gave you the full disclosure.
So there's some risk there too.
Yeah, just make sure you're not cropping out any of the fine print. Yeah. Because the equal housing lender and all of that stuff needs to be on there. Yeah. So we'll provide that marketing material for you. Just tell us how much the seller is willing to participate so that we can back into those figures and decide if it's a 2-1, 1-1, 3-2-1, or a permanent. But we have stuff specifically created for you guys to use. So took me a little while to get it through compliance, but we got it. That's a good question. Any of those kind of questions, if you go to castleteam@guildmortgage.net or call the team number, I'm on all of that stuff too. So it'll just be whoever is first available, or, you know, I mean, we're on it, all of us. But the team number is 903-957-3127. And you can text or call that number. Same thing whenever y'all run across manufactured homes and you're not quite sure if the home's going to qualify. Just put in the subject line, check this manufactured home for me, and give us the MLS number and the address and anything else that you know about it, and we'll look it up for you. Y'all, we're not looking up any websites you don't have access to, but sometimes it just helps because we know what we're looking for. And you guys, if you only do, you know, manufactured home once every 6 months, you may not remember where all you got to go. And then we'll follow it up and make sure you have a checklist. Education and communication are the two things that we are very proactive about. So any of that stuff that y'all need, just let us know. You guys, it's going to be okay. It's just different. And the sooner that people accept the normal, the new normal, the better we'll be. But I think it's all in the education and the communication that we're putting out there. there are some fabulous opportunities, and buyers have an opportunity to actually buy. Yes, the rate's a little bit higher, but it won't be that way forever. And the sooner you're building equity in your own home, the sooner, I mean, the closer to wealth building and financial freedom you are. And I mean, I am all about it in educating people on how to get to a place where you have enough equity, you feel like you have financial freedom. And real estate is a great way to leverage that. How many of you guys have money in the market right now? Real estate's still the safest investment. Even if it goes down to 2 or 3% appreciation, it's still a lot safer than my stocks are right now. It's a smart idea to buy real estate. We just have to get people off the fence through education. So if y'all are looking for any content, tell me what you're looking for. I can get it for you so that you can put that message out there. So anybody on the call have any additional questions? Cool. All right. Let's go set the world on fire.